That's an important question to answer in the first place.
Yes, very, very important, Alex. I wonder what this entails, and I'm keenly watching this space to try and understand better, one, on the ICICI Bank side of things, as to what happens and what are the trends that they start to see. And we will only know that when the con call happens at the end of Q2. So we still have 2 months to go for that. But interesting times, Mahima. Does this essentially lead to more banks following through? Doesn't seem like the case, at least at this point. Banks have fairly refrained from keeping this as the benchmark for the others to follow suit. But interesting times. Would you keep 50,000 in your bank account?
I mean, it depends, like Alex said, that if your 2 months spending is more than that 50,000 mark, it won't make a difference. So by that, I'm not going to tell whether I'm going to keep it or not. But yeah, understanding should be there, and that's important for our viewers also to understand that beyond that, it will not make sense for you. But if your expenses less than that 50,000 mark for 2 odd months, then it'll hit you badly. You rather park your funds somewhere that gives you fetches you better interest, as simple as that.
Okay, interesting. We have Himen with us. I'm curious to know his view on this.
Sure.
I know, Himen, I know this is off topic, out of syllabus question. What advice do you have for our viewers? Give us perspective.
The way I look at it, I'll buy some PSU bank stocks first. People are going to get fed up of this, and like Mahima also said, I think I would, if I remember correctly, at least half a dozen PSU banks have zero interest for maybe 2,000-3,000. So I think that's good. Probably that's why State Bank has already gone up today. But I'm not sure if everything gravitates towards that. Metros, yeah, 50,000 might not seem that big, but if you have EMIs on your head, I'm not sure what's the logic for doing it. But like I said, I'll buy PSU banks.
Yes, absolutely puzzled, but buying PSU banks, Himen, on a day when the PSU banking index is up 2%, clearly the market seems to be agreeing and agreeing very, very well with you. Himen, off topic, there's a Garware High-Tech. Now, on the back of numbers, I know that move has come, but 9% lower. Give us your perspective. What are you seeing on charts with regard to this one?
Oh, okay, 9% lower on results, but frankly speaking, we've been lower since quite some time, Harsh. If you see, the stock has peaked way back in December 24. Markets peaked in September 24. Stock has peaked in December 24 at 5378. So we've been doing yo-yo since then, but we've virtually fallen off a cliff and nothing changed. Yes, what does happen is there's a bearish gap because of the results, which is not a good sign. On the other hand, you had very high volume as highest since I think 21st May. I believe strong hands would have bought at this level. For that, we need the level to hold. I mean, today's low to hold for a few trading sessions. But if I go back in April, there was a bullish gap which was left open. Normally, markets and stocks, at least out of 10 times, there's not a thumb rule, but 7 or 8 times, they have a tendency to cover up these gaps. So that bullish gap is now getting covered up. And this is after we're coming up from 4,800 to 2,800, 2,000 points. I'm not sure there's too much of a downside, at least in the near term.
All right. Okay, Himen, I believe we'll have to let you go at that. But thank you so much for taking out the time and giving us those insights.
Thank you for having me.
All right. With that, it's also time to slip into a very short break. But we leave you with important word from MK Global CEO and Head of Research. They shared their top picks from this space. Listen in to what they had to say, and we'll be right back.
Our starting hypothesis is that we've seen rate cuts, and we still believe that there are rate cuts in the fray, despite the fact that RBI has done what he has done, which means that it's a great benefit to all the NBFCs. So within banks and NBFCs, we clearly believe that you've got a 2-3 year run for NBFCs. And the reason for that is that if you actually look at private sector banks, as we see now today, their 2-year earnings CAGR is just about 9-10%, which is a bit of a problem, right? And maybe because your provisions are coming back to average or whatever it is. If you look at most of the well-run NBFCs, when I talk about well-run, I'm talking about corporate-led, AAA-rated NBFCs. They have grown at about 25% in the last 3 years. The guidance is to grow at 25% over the next 3 years, and therefore the divergence between the growth rate for NBFCs and banks is huge, which means that there'll be big flow of money that gets into that, right? This is a heavily owned sector, which is not probably going to do as well till the time credit growth picks up, and therefore that's an pocket of growth that comes out. I already referred to platform companies. You should be bullish on something like L&T, the domestic infrastructure. Some of the sectors over there are very, very cheap. So, barring consumption, which is again a valuation-led issue, I think that at least some of these sectors, I remain fairly constructive. Sam may want to add.
Yeah, in addition to that, consumer discretionary, which has had 4 to 6 bad quarters, and we see a recovery coming. Some of those valuations have now moderated.
So you mean the AC compliance appliances businesses, those?
No, consumer discretionary is mainly autos if you look at weightage. Okay, but there is also that consumer electricals.
You think autos will come back?
Yes, I would selectively start looking at autos at this stage on a forward-looking basis. In a short-term cyclical cycle, I would prefer to look at two-wheelers, but from a longer-term perspective, four-wheelers as well. And some of those stocks, if you've seen, despite the numbers being weak, have already started doing quite well in the last 5 or 6 months. And industrials, as he was alluding to, that is the other sector there where we are overweight. Some of the other themes that we are looking at are the airlines. We think that airlines is set. The entire airline ecosystem, the long-term structural growth is very strong. You're seeing 2 new airports come in the next 6-8 months. You're going to see an increased capacity. So there's a lot.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग, तब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company.
powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चलता है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy.
Welcome back. Thanks for staying with us. This is India Market Close. I'm joined by Neeraj, of course, right next to me, and Mahima, who has been with us. But it's that time of the show, where we go across to Somit, who's also joined us in the studio, to give us a perspective on everything that he's been listening to while speaking with dealers. Heard on the street. Somit.
Well, multiple stocks in focus. Firstly, it's NTPC and Power Grid, where dealers are indicating that there are buy flows on institutional desks. Both foreign and domestic institutions have been accumulating this counter in trade. They believe that valuations are cheap, and in current market volatility, these two counters come in as a safe and stable income bet. When it comes to Asian energy, dealers are indicating that there are buy flows on HNI desk on anticipation for large order win that could be announced soon. For Ashapura Mine Camp, large prominent investor. Now, a large prominent investor has been a buyer in trade today is what dealers are indicating. For Engineers India and Tata Rail, high HNIs have been accumulating Engineers India on anticipation of strong numbers, while they have been selling Tata Rail on anticipation of weak Q1 numbers. For Tata Motors, despite the weak set of numbers, there are buy flows on institutional desk as the worst seems to be priced in is what dealers are indicating. And lastly, when it comes to PG Electroplast, that counter has been under pressure for the last couple of trading sessions, but dealers are indicating that the selling for this counter most likely will get over in trade today.
Okay, I think we just need to change that stock, because what Somit was talking about when it said that worst seems to be over was PG Electroplast. So we were showing Tata Motors there.
No, for Tata Motors, its worst is also over.
No, worst of the selling pressure getting over is for PG Electroplast.
Yeah, that is for PG Electroplast.
Yeah, because Tata Motors is up 2.5% today. So if you can just highlight that, the fourth stock on the list is PG Electroplast, for where the worst of the selling seems to be over. I think that's the point that dealing rooms are making. Now, Somit, just one quick follow-up, and with regard to Tata Motors. Why this buying? Is it, I mean, theoretically, when I think of it, coming closer to the demerger date, etc., all of that is positive.
Right.
The stock is also corrected quite a bit. Is there something else that the street may be missing?
So, firstly, the stock has already corrected because of this volatility that we have seen because of the Trump tariff, and hence valuations are not that expensive, and whatever negative commentary has come in is something that the street was already expecting. So there is nothing incrementally negative that has come in for Tata Motors, and that is one of the key reason why there are these buy flows. And for PG Electroplast, one more thing that we also need to focus is the fact that the stock might enter F&O ban. So that could also be one of the reason why there could be not much of a downside from current levels.
Got it. Okay.
The other piece, sorry, if I can just chime in.
On Tamo?
On Tamo, yeah. Somit, 2/3 of the top line comes from JLR.
Right.
And JLR manufacturing doesn't happen in India.
Right.
Largely unaffected by the tariff.
50% tariff that is
the news,
right, yeah.
The absolute fresh news which has come through. So technically,
there is no negative.
Exactly.
There is no incremental negative there.
Exactly.
No, I'll tell you the incremental negative. To my mind, the incremental negative is they not being able to compete on the global front with the high price cars the way BYD is.
Fair. Yes, that's for sure a negative.
That is there.
If BYD is hitting Tesla, and presumably if JLR is going all electric and their price points might be in or around Tesla, will they be able to get incremental sales?
That is a question.
It's a question mark, right?
That's a question, right?
Yeah, and that could possibly be a big negative because we're seeing BYD pick up in a substantial fashion globally, and Tesla lagging on the back of that. So okay, excellent. I guess this discussion set it up very, very well. Thanks, Amit, for that.
Well, it set up the markets very well too. We are trading at the day's highs. What a turnaround and what a start of the week. Akshay Bhagwat joins in to talk about that on the technicals. In a bit, Siddharth Khemka. In fact, not in a bit. Siddharth is here with us. And Siddharth, I remember we wanted to talk about rare earths the last time. We'll do it this time around. But first, Akshay, thank you for joining in. Day's high. Where do we go from here? What kind of trades do you initiate?
Good afternoon, Neeraj. So yes, a good start for the week. 24, 300, 350, second time retested in the morning. We have a recovery scenario back again. And in all probability with the data points, we look on the price charts, the derivative indicators, the chances of Nifty heading back for levels of 24,800 soon looks a higher probability. An excellent risk reward ratio offered for Nifty buyers at the current levels. So makes a lot of sense to buy here for trading targets till 24,800.
So, Akshay, are you playing this via options or are you going long plain vanilla futures at the current levels? 0.85% higher.
Yeah. So even in options, it works. You can actually consider buying a 24,600 call for Nifty. If you are playing a directional vanilla call bet for the 14th of August weekly expiry. So almost just out of the money call. And I think if we have Nifty moving till 24,700 also for this coming week, you can see easily 50% premium gains in Nifty from the current market prices.
Okay, Akshay, picks for this afternoon?
Yeah. So a couple of picks, both on the buy side. The first call is in Varun Beverages. If you look at the price traction, an excellent positive setup for today. Overall, the broader view also is very strong for Varun Beverages, the way the last couple of months the recovery have been. Looking forward for targets of 532, extended target till 541 with stop loss at 489. That's the first trade. Second trade is in Hero MotoCorp. The stock has cooled down a bit today, but I believe the broader technical setup is extremely strong and this stock should regain its lost momentum in the last couple of days and move for targets of 4,700 and 4,727. These two targets would be on your radar and stop loss would be 4,467 on this trade.
Okay, Siddharth, let me bring you into the conversation as well. Good afternoon, good having you. Siddharth, what do you make of this take that Somit has just given us? This is what he is hearing from dealing rooms, that there is some amount of bottoming out where Tata Motors is concerned. There's also a view which Neeraj just put forth, saying that China and BYD could be big competition for Tata Motors from a JLR standpoint. How much of some of those factors warrant merit at this point, and what are you advising viewers to do with a Tata Motors stock?
Yeah, good afternoon. I think yes, there is a lot of debate going on within our dealing desk as well with regards to Tata Motors. Is the current price factoring in the worst, or there is still room for further downside? What we believe is that there are several multiple headwinds that JLR is facing, which include, and the biggest of all is the tariff-led uncertainty for exports to the US. As we know, a lot of that JLR products being manufactured from UK, Europe, and is getting exported into US. So that is the biggest concern. Demand weakness in key regions like Europe, China, that is also a big concern, and especially given that some of the newer emerging brands such as BYD are eating away into the market shares of the likes of Tata Motors, Teslas. Even Tesla is facing a similar headwind in terms of weakness in demand. Plus, you have the rising costs with related to warranties, emission costs, all those things. So given these factors, what management has refrained from giving any guidance, but what we see is that we expect margin pressure to persist for JLR. We have factored a 150 basis points decline over the next 2 years, so over FY25 to FY27. Even in India, both CVs as well as the passenger vehicle business are seeing some moderation in demand. And due to these lack of triggers, while the stock seems to have fallen, corrected, and a lot of these is already in the price, we don't see any near-term triggers except for the price, and hence we continue to remain neutral on Tata Motors.
that's the view with regards to where Tata Motors stands. But one stock that has been in focus on Friday also and today also, and that's PG Electroplast. The stock has tanked, and how? Almost down 34% in the past 2 or trading sessions, and this is on account of a couple of things that's not worked for the counter. Now, we've tried to list down what has not worked, of course, in Q1 and certain pain points for this particular company. As I mentioned, down 34% in the last 2 trading sessions. In terms of what's not worked, weak Q1, and plus management has gone ahead and reduced the guidance overall. In terms of the order cancellations in June and July, that was very high, and this is on the back of early onset of monsoons. High inventory levels were also observed, and inventory days have also gone up significantly. Working capital days have also been significantly increasing in the past 3 years. Plus, there is deteriorating cash flows, and promoters are also reducing their stake in the company. Now, let's take a look at each of these metrics one by one in detail. Weak Q1 FY26, of course, well, overall sharp decline in the profits, plus a major disappointment for investors, and margins down by around 183 basis points to that 8.06% mark. Versus that of almost 10% earlier. In terms of the overall PAT, that's down 20% on YOY basis and a 54% on quarter-on-quarter basis, and margins have taken a hit. Overall, in terms of the growth guidance, that's been reduced by the management. Let's take a look at it one by one as to what's happened there. Overall consolidated revenue guidance, which was earlier a 30%, has been brought down to 17 to 19%. The number expectation in terms of consolidated revenue, that was around 6,300 odd crores, that's been brought down to around 5,700 to 5,800 crores. In terms of product revenue growth, which was earlier guided at 35%, has been brought down to 17 to 21%, and electronics revenue growth, which was earlier 43 odd percent, has been brought down to 29%. Even the PAT and EBITDA margin guidance has been lowered. The PAT guidance lowered from that 400 crore to around 300 to 310 crores, almost a 100 crore downtick there. In terms of the overall percentage, the expectation was around 39%, but that's brought down to around 7 odd percent. In terms of the order cancellation, now this is interesting because June and July have seen order cancellations up to 70% for this counter, and this is because of early onset of monsoons, and that could probably impact the operational leverage of the company as well. In terms of inventory levels as of June ending stood at around 1350 crores, and 97 to 98% of that is raw materials, and inventory is expected to normalize only by Q3. So Q2 will also be under pressure on the back of high inventory levels. In terms of inventory days, well, that's gone up from 73 days in March 2023 to almost 123 days in March 2025. With regards to where the working capital days stands, that has also significantly gone up 9 days to 60 days in March 2025. Overall, promoters have also been reducing stake in the company. The stake stood at around 61.3% in March 2023, which is brought down to around 49.3% in March 2025. Lastly, what brokerages are saying, well, Nuvama has maintained buy and maintained target price of 710, but they've slashed their 26, 27 and FY28 EPS estimates by 36%, 25% and 10% respectively. In terms of JM Financial, they've retained buy with a target price of 790. Here also they've cut their EPS estimates between 13 to 27%, but they're saying that it's expected to deliver average ROE of 14% over FY25 to 28. Lastly, because of PG Electroplast cutting its guidance and being under pressure, there has been ripple effect or domino effect on Amber Enterprises as well as EPAC Durable. Amber Enterprises touched an intraday low of around 7.5%, and EPAC Durables also touched an intraday low of around 5.8 odd percent. In fact, we also spoke to the management today, listening to what he had to say.
In the Q1, the industry as a whole has seen a degrowth of 25 to 30%. Almost all the major AC players, AC brands or AC manufacturers have experienced a degrowth in their numbers for the Q1. We as a PG Electroplast has been able to deliver a growth of 14% in our revenue top line. Please understand. Now, when we dive deeper into this subject on how the slowdown in this AC is happening, please see there has been an early onset of monsoon. So because of the early onset of monsoon and due to the high channel inventory, the overall summer selling season for the air conditioners got compressed and it fell off beyond the anticipation of any of the industry players. So there has been a decline in the numbers of sales for the ACs. The tertiary sales or the secondary sales were very low. And in month of July and August, as we are seeing right now, the sales are practically not happening.
Okay, stock of course has halved now. Siddharth Khemka, views with regard to a PG Electro?
So, we don't cover PG Electro, but definitely you see a lot of pressure in these AC companies. Voltas has also come out with weak performance. Management commentary highlighted that Q1 has been a challenging period, especially because of a weak summer and then early onset of monsoon. I think there is still one more quarter of weakness. All the commentaries suggest that the management are hopeful of some recovery in the festive season. Till then, I think estimates have been brought down, and I think the stocks could remain under pressure for some more time. Voltas, we have a neutral rating as of now.
Siddharth, here's the question though. The Voltas management has said that inventory cleanup as well as festive demand would actually help. Now, my question is this baking in the worst, PG or a Voltas or some others? Are they baking in the worst? Because these seasonal disappointments are not new. We know that could happen every time, and it's not that it will happen again the next time. Next time it could actually be a really good quarter as well, right? So is this an opportunity to add, or would you wait for some more time?
I think, Neeraj, very good question. We were debating about this in our morning meeting today. So what looks like, yes, these seasonal effects do come into picture, especially for some of these seasonal products. And even last year, we saw post-festive season, some of these products, especially the likes of Voltas and some of these other consumer durable companies, started to pick up even in the December quarter on back of strong recovery in the growth. So I think we are hopeful that festive season could see some improvement in terms of numbers. And some of these companies, as you rightly highlighted, yes, for example, a PG Electroplast, we don't have coverage, but the trailing P has compressed sharply from excess of 100% to now about 60 odd P, which is in line with the others in the industry. So I think, yes, some of these stocks, be it a Voltas, PG Electro, Amber, I think these are good levels for someone who has patience to start accumulating, because good prices and good news don't come together. You will get good prices to enter only in times of bad times where the things are under pressure, because the core business is not changed. I think the long-term structural story, demand for air conditioners in India, that remains pretty strong.
Buying PG, right?
Yeah.
Well noted. Now, just before we get the technical view, I think it's worthwhile highlighting the flashes on your screen. Because we have some irresponsible, unnecessary comments by select band of army personnel and the army chief in Pakistan. MEA has responded saying that we'll never give in to nuclear blackmail, and nuclear saber rattling is actually Pakistan's stock in trade, and the international community will actually verify some of this as well. So India is making it stand clear, as it should. I don't personally think it was necessary, because those things can happen from the other end whenever it comes about, but good to see that response nevertheless. So just wanted to mark that. The flashes on your screen give you a sense of that. Okay, just taking it to Akshay. Any of these stocks near some key support levels? Voltas, maybe a PG, maybe an Amber?
See, at least the way PG Electroplast is reacting the last couple of days, it makes a lot of sense for the dust to settle, because although it is highly oversold, you might get some bit of respite buying around 460 odd levels. But really, from a technical perspective, first we need signs of stability before we call it a support. At least what I understand is that Voltas is better placed out of the entire lot of stocks which we are looking at. Here, the stock has tested its key support zone of 1200. corrected. If you look at the daily charts, there have been multiple instances where the stock has a tendency of recovering from 1200, and when it recovers till 1400. So following this traditional buy at support kind of a scenario, I think today post gap down it has recovered well, and bodes well for a good risk reward trading bet where the recovery can see 1300, 1325 on the short term trading charts. So I think Voltas is better placed among all the names which we discussed.
All right. Okay. So that's with regards to where these EMS companies and consumer durable companies stand. But speaking of earnings, a lot of earnings per se are under pressure on the losing side of end, of course. And there's something like Entero Health. There's always also Garware High-Tech Films and PTC Industries, which are under pressure. And we have Vansh joining in with more details on what's not worked for these companies.
Yeah, so let me start off with Entero Healthcare. Now the stock is down post the Q1 FY26 results, and this is on the back of the EBITDA estimates that the company has missed the EBITDA estimates, and the street is clearly disappointed from this. And the EBITDA, however, the EBITDA margin has been expanded by, which has been led by the value-added services, and the lower tax has further aided the net profit for this company. However, the management has reaffirmed the 30% revenue growth for FY26. If we talk about the numbers, the revenue was up 28% at 1400 odd crores versus 1097 odd crores. The EBITDA was up 66% at 50 odd crores versus 30 crores, and the margins were at 3.6% versus 2.7%. The net profit is up 43% at 30 crores versus 21 crores. Second on the list is Garware High-Tech. Now this again a weakest set of numbers from this company. There has been a weak operational performance which has been supported by the shrink in margins, and the net profit has been largely dragged by EBITDA. If we talk about the results, the revenue is up by 4% at 495 odd crores versus 475 crores. The EBITDA is down 7% at 110 crores versus 119 crores. Net profit is down 6% at 83 crores versus 89 crores. Last on the list is PTC Industries. Now the stock is down 6%. Now this is on the back of the Q1 FY26 earnings, and this is the set of earnings has been weak. This is backed by the recent acquisition that the company has done, and also the cost of materials for the company has grown by two times, and the profit has been aided by other income. If we talk about the results, the revenue stood at 97 crores versus 46 crores. Margin stood at 9% versus 21%. And the EBITDA was down 12% at 9 crores versus 10 crores. And net profit was up by 5%. So clearly a weak set of numbers that the market is penciling in for all these counters.
Weak set of numbers on those counters. Thank you for that, Vansh, for bringing us all of those highlights. Siddharth Khemka, any perspective you could give us in terms of numbers which are standing out for you in trade today? Anything that for you was an observation from some of the results that have come out?
Yeah, I think a lot of results, and we are in the last leg of earnings season. So if you look at from the large cap perspective, I think State Bank numbers clearly stood out. We saw steady quarter. Although if you look at from a broad numbers, it looks like treasury gains, but if you look at the finer details, it looked like growth all across. Advances was up about 12%. Strong traction in retail loans, SME lending, corporate growth was supported by robust sanction pipeline. Asset quality continued to remain healthy. What some of the other operational initiatives that the company has taken, the AI-led Project Saral, they are leading to improving efficiencies as well as customer service. One thing which generally we have a perception that PSUs don't have, but over the past few years, we have seen SBI customer service be it at par with some of the larger private players. So definitely a leg up for SBI in terms of that. So overall, I think very strong earnings from SBI in the large cap space that we saw today.
Okay, all right. Thank you for that view coming in on an SBI, Siddharth. Of course, the stock doing very well for itself in trade today. But Siddharth told we're going to have to let you go. So thank you so much for coming in, giving us all of those views. And with that, what we'll also do is we'll slip into a very short break. On the other side, we'll get you top buy today, sell tomorrow picks. And if we can just pull up the stock price of NSDL, because in a few days, is the first time it slipped into the red. We're going to discuss this as well as the top BTST picks along with some of the other things including bull versus bear. Stay with us.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशिताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं होता हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं होता हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company?
watching India Market Close. Now we are focusing on something important here. Let's cut across to Green Rev Summit 2025, where Adani Total Gas ED and CEO Suresh Manglani is involved in a conversation about India's blueprint for 15% gas-powered future. Listen.
Domestic gas production or midstream, building up the national gas grid across the country, or building the RLNG terminals at various strategic locations. And the last, on the downstream side, again, if you see, barring one or two islands, maybe Lakshadweep or something, for entire India, regulator has now already given the authorizations. So at the moment when I'm speaking to you, large number of CGDs companies are building city gas distribution network across pan-India basis. Similarly, national gas grid is expanding, almost becoming double. RNG terminals are getting constructed or commissioned. So I think we are on a right path to move from a 6.5% to 15% by 2030.
Right, sir. Now, NDTV has, very strongly campaigned for cleaner air, and especially when it comes to our cities, when it comes to our national capital. So to explain this to people who are watching who may not understand our energy needs as as much as what we're explaining, as detailed as it is, what this means for cleaner emissions and air quality in our cities, in our industrial areas.
So as compared to other fuels which is being used today, whether in the industrial units they use liquid fuels or solid fuels. At homes we use LPG. Likewise, commercial establishments are also using LPG and several other fuels. So as compared to those fuels, natural gas is far cleaner. Almost 30 to 40% you save on carbon dioxide. Then similarly you save on sulfur dioxide and many other NOx levels. So naturally, natural gas is far cleaner, and it is the government policy. The government has been promoting usage of natural gas, and you have seen in NCR itself when there was a lot of pollution was happening. This Honorable Supreme Court itself took the PIL and they started promoting CNG as a fuel even for a transport. So it is an undisputed fact that adoption of a natural gas will bring relief for the all the cities, urban areas, and also the rural areas for breathing the fresh air and clean air.
Absolutely. So let's hope this adoption happens, as fast as it can. Sir, so you spoke about, this ambitious.
Okay, so that's obviously the take coming in from Adani Total Gas. But just before we went to break, we were speaking about State Bank of India, and we spoke about the fundamental factors which are aiding the stock price today. Also joining me, Avinash Gorakshekar, Director, Research, Profit Mart Securities on the show. So yes, we did speak about State Bank of India, but along with it, some of the PSU banks also doing fairly well for themselves. A PNB, a BOB, a Canara Bank are some of the top gainers. In fact, 4 of the PSU banks are the top gainers on the Nifty banking index. Avinash, PSUs versus private banks, do you have a view? And a quick one, because of the outperformance that we're seeing in PSUs today specifically. Avinash, I believe you're on mute.
Yeah, sorry. Harsh, I think I would say that, the valuations wise, if you look at the public sector banks and the private sector banks, the discount of the PSU banks compared to the private sector banks is quite significant. And I think hopefully the second half for this financial year will be a stronger quarter in terms of credit growth, in terms of both government and corporate, private corporate capex. I would not be surprised that, the first quarter has been disappointing for most of the PSU banks. If you look at numbers from Bank of Baroda, Canara Bank, or that way PNB, I think SBI has shown a decent number, but I would say the bigger performance would obviously come in the second half. And hopefully, this is a sector which is driven by domestic demand. So, the US tariff issue is not going to bother them. My sense is that valuations are attractive. So you are seeing a little bit of bounce back effect after the SBI numbers. But overall, we remain constructive on Canara Bank, Bank of Baroda, because our sense is that, at these levels, there's nothing to lose. And I think if the economy grows a little better in the second half, hopefully the tariff issue is also resolved. Domestic corporate capex also gets speeded up. Government is also going to spend a lot of money on infra. So all these things definitely mean good news for the banks. And I think asset quality, Q1 numbers, post Q1 numbers, I mean, one thing is very clear, that maybe the profit growth was either flat or negative, but the asset quality remains to be quite strong. So, that is one point which is very important when you look at, the PSU banks. So net, I think we are constructive. I think you need to take a slightly longer term view here. But yes, at these values, definitely the risk reward could be better if one takes a slightly medium to long term view.
Neeraj, if we can just pull out the breath on the Nifty today, and that's what's really standing out for me. After what's been a tough few weeks, we're seeing such strong breath, and I'm talking the Nifty 50. We can pull up the heat map. That'll give us perspective. 47 stocks sitting in the green as we speak. It's not a specific stock-led rally that we're seeing today. We're 1% higher on the Nifty now. We're seeing the breadth really pulling its force behind the Nifty, and that's what's pushing the index higher. Of course, we've not hit that 1%, but directionally, we're slowly and steadily inching towards the 1%. So it's been a solid Monday pretty much all through the day, because it's been a stable one-way move on the index. Avinash, are you buying absolutely anything in this market at this point? Are you playing wait and watch? Is tariffs bothering you at this point?
So I think we would prefer the domestic facing sector, Harsh. I think something like cement has done very well in the Q1. If you look at most of the companies which have come out with results, I think normally the first quarter is not a great quarter for the cement companies, but this time, most of the larger players have done well. I would say that, a stock like Ramco Cement, Ambuja Cements, typically even Ultratech, these are stocks which have shown much better than what the street expected. So I think, we have been telling our clients to also accumulate, stocks like JK Cement. So numbers have been pretty good. And I think the other sector which is really expected to do well is the hospitality and the hospital sector. I think hospitality is one sector where we have seen players like Indian Hotels, BLS International, very strong numbers in the first quarter. Typically, this sector does very well in the second half, but the first quarter itself has been quite strong. If you talk about hospitals, Apollo hospitals from the large cap, the smaller ones like Yatra hospitals, almost 40% jump in their Q1 profit. So typically, I think hospitals is also one segment where I think the markets could look at them very positively, because typically now what is happening is the hospitals are breaking even much earlier, and this is an area where the risk reward is getting better because there's a huge kind of supply crunch. So I think players which are offering specialized services will definitely continue to do well. So I think hospitals, hotels, the hospital sector, and typically the consumer facing sector, like typically with a good monsoon, agrochemicals, fertilizers, consumer durables, these are going to be also segments where you could see a strong second half coming in, because the monsoon effect would obviously be felt from the September quarter onwards.
Okay, all right. So Avinash, thanks for that.
Okay, interesting. So agrochemicals, cement, hotels and hospitals is what Avinash is liking right now. But, talking about the consumer durable space now, that sector has been in focus. And, while for agrochemicals, a good monsoon is positive, for consumer durables, an early monsoon definitely is a negative. And Voltas is one of those counters which has been impacted because of unseasonal and early monsoon. So we've tried to do a bull versus bear case on Voltas today. In terms of where the Q1 performance is concerned, overall there's a month-on-month improvement in the market share in the RAC segment specifically. That is something that the management guided in the con call. But overall weaker volumes and the scale back of factory operations in the mid-season plus the early monsoons onset has impacted the overall earnings, and that's also led to higher inventory in terms of where Voltas is concerned, both in terms of the company as well as the channel inventory. In terms of the overall margins in the segmental performance, there is improvement in the electromechanical projects margins, but when it comes to unitary products, there was a significant downtick in margins there, and that stood at around 10 years low as well this quarter. So that's something that is concerning as of now, but hopefully once the inventory gets cleared, the margins will bounce back to the normative levels. In terms of Voltas's inventory, they are right now sitting on 3 to 4 months of inventory and 2 to 3 months of channel inventory as well. So So that's a concern right now, and probably Q3, by Q3 they will be able to get rid of this entire inventory that's stacked up. But the positive side in terms of where the entire Voltas is concerned, this actually should be opposite. So that's the bear case. But in terms of BE norms, if that gets confirmed, that should be a positive when it comes to Voltas. In terms of Jefferies, now that's an interesting report, because what they're saying is that the company is currently trading as 36 times FY27 forward PE, 22% below its historical 5-year average PE. So that probably even at 36 times make the stock attractive. But on the other side, they've also cut their FY27 to 28 EPS estimates by 2 to 3 odd percent and have estimated a 19% CAGR growth over FY25 to 28. In terms of lastly where ANR stands for this particular counter, there are 21 buy calls, 13 hold calls and 7 sell calls, with an upside potential as per Bloomberg estimates at around 12%. So that's Harsh with regards to where Voltas's bull versus bear case stands, and of course where the ANR also stands.
Excellent. Let's quickly ask Avinash for a view. Avinash, what's the view with regard to Voltas?
No, I think in the very near term, Harsh, we expect that earnings are going to be impacted, and this is definitely going to be not a great, quarter, the September quarter also. And I think, the markets have been quite surprised that this time the weather has spoiled the performance for a company like Voltas. So I think, we have been telling our clients to continue to hold, but no fresh buying is advisable, because even the July to September quarter, according to me, is going to be either a muted or a flat quarter. And I think earnings growth is definitely now going to be a big question mark. So maybe in the next 2-3 months, if they are able to ramp up sales, but typically the main season, if it gets lost, then I think, for a company like Voltas, they'll have to wait for the next financial year for the new season to come in. So I think it's going to be a little tough for the company. So prefer a hold and no fresh buying suggested at these levels.
Prefer a hold, no fresh buying. Ajit Mishra, welcome. Good afternoon from Religare Broking, joining us on the technical side. Ajit, what's the view?
Hi, good afternoon, Harsh.
Good afternoon.
So basically what we are seeing in most of the consumer durable name, in fact, in the recent months, the participation was muted, means we were seeing a bit of a recovery or a rebound for the last couple of months. But if you talk about specifically for Voltas, around close to around 1140, 1130 was the area basically where it tested twice in the recent past, and there was a marginal recovery towards 1380 area where the short-term averages are placed on the weekly charts. After retesting that level with marginal volumes, again we are seeing a drift towards the lower band. So this indicates that consolidation is likely to continue. So in case if somebody is having a short-term view, this stock might continue to consolidate in this band of around 1100 to 1380, 1400. So it's prudent that one should refrain from any aggressive longs at current levels. But yeah, in case if you have any existing positions, you can stay put with 1200 as a closing stop loss.
Okay. Ajit, hi, good afternoon. Your top picks for the day?
Yeah, good afternoon, Vigma. So currently we are seeing that the PSU banking counters are, back with a bang, and Indian Bank within the space is leading from the front for almost like several months now. The stock have made a new record high post the consolidation range breakout today, and we expect this momentum to further continue. The 700 is what we are eyeing in the near future, so one can accumulate at current level with 655 as a stop loss. Another stock that we like is the heavyweight from the capital goods space, that is L&T. Post numbers, we were seeing that stock was consolidating in a very tight range, and currently we are trading around the upper band of the same. So possibility of trend resumption seems high, and 3800 is what we are eyeing in the near future. So with stop at 3590, one can accumulate L&T also at current levels.
Okay. Avinash, anything in the Alcobev space that you're liking? Sula is the one stock that's been beaten down post its earnings, and quite a possibility on the cards that next quarter, considering how they've come down to around 1.5 crores of profit only, they might also turn into a loss-making company the next quarter. But considering everything that's happening in the Alcobev space, the Maharashtra liquor policy as well, anything specific that you're liking in the space?
No, I think as far as Sula wine is concerned, I think the numbers have not actually shaped up to the market expectations. I think the wine market, according to me, is yet a new market, and I think getting incremental volumes has been a challenge for the company. So I think even the second quarter, July to September, is going to be equally challenging. So I think except for that, if you look at Radico Khaitan, Associated Alcohol and Breweries, these are companies where we have coverage, and I think I would be more positive on both these players, considering the fact that recently a small player like Associated Alcohol reported its Q1 numbers, very strong EBITDA numbers, profit numbers. The management commentary also has been very encouraging. So I think we have been putting out views on these companies largely because we feel that the upside is clearly visible. I think in case of Associated Alcohol for FY26 also, we expect that earnings growth could be at least 20 to 25%, and valuations look pretty attractive. The company has a very lean balance sheet, very little less debt on the books. They also are now getting into ethanol, which I think which also will add to their revenue and profitability. So I think overall the space is attractive. I think these stocks have always been fair to expensive, but I think maybe Radico Khaitan and Associated Alcohol one can definitely look at buying in a SIP way if one looks at the medium to long term kind of time frame.
Okay, stay on, gentlemen. Some more counters to talk about, but before we get there, let's get in, Jasmeet, to talk about some key buzzing stocks, including DOMS and Akums Drugs, and as well HBL, which Jasmeet, I thought came out with very good set of numbers.
Well, right, as rightly said, now I have three buzzing stocks in the market on the back of earnings. The first one on my list is DOMS Industry. While we see there has been recovery in the core sector, which has grown 18% for this quarter, that's why the stock is up and buzzing. While the margin delivery was in line with the management guidance as for the previous quarter. Looking at the key numbers of the management, the revenue is up 26%, while the EBITDA is up 14%. The margins are in line. They see a slight pressure compared to the previous year, while the net profit is up 10% in trade. The next one on my list is HBL Engineering. While the stock is almost up 13% in trade today, there have been a strong expansion in the margins, while this has come on the back of reduction in the work in progress. So last time it was a positive 6 crore, but this time quarter we see it's a negative 70 crore, which has helped in the expansion of the margin and reduction in the cost. While when you look at the other income, that has also grown, while the employment expense has also risen in this particular quarter. Looking at the key financial and key numbers of this particular company, the revenue is up 50%, while the EBITDA is up 74%. Now the margins have come up at 31% versus 21% in the previous quarter, expansion of 1,000 basis points in this quarter. And net profit is up again 79%. The next one on the list is Akums Drugs. While the stock is buzzing and it's up almost 7 to 8% in trade today, what led to this growth would be firstly the net profit misses the estimates on a slight basis, but the company achieved the 1,000 mark of DGCI approval. In this quarter, they have received an approval for 26 such drugs. Looking at the overall segmental performance, both domestic and international market have grown each by 3 and 2% on YOY basis. Talking about the key financials and key numbers of the company and how they have performed, the revenue is up slightly 0.5%. It's roughly muted from the last time, but the EBITDA is up 1%. The margins have remained flat at 12.6%, while the net profit is up 5%. So these are the stocks buzzing in trade today on the back of earnings.
Yep. Okay. Thanks for that, Jasmeet. So HBL is of course a no-brainer. Avinash, I don't know if you track HBL, and if not, if you track Akums Drugs, because I think they're doing some pretty interesting domestic CDMO work.
So I think Neeraj, HBL we do track, and I think as a company we have found that it's got a very unique and a very strong product base. They cater to the defense, aerospace, railway sectors. The order book has been very strong, and in this quarter specifically, margins have improved quite significantly. Typically these companies are now in the limelight because the railway and the defense business are going to be the growth engines for this company. And I mean, in terms of their technical capabilities, in terms of the scale up opportunity, I would say that there's a lot of risk reward left even going forward. So somebody who's got a 12 to 18 month time frame can definitely look at accumulating the share, because we believe that the order book has got a very strong revenue visibility for the company. As far as Akums Drugs is concerned, we don't have a very direct coverage, but I think as you rightly said, we need to have at least maybe another 1 or 2 quarters of consistent growth. The long-term performance definitely will get visualized only when we see consistency in the numbers. This quarter has been good. But I think clearly what kind of management commentary and what kind of growth comes in from the new, initiative which you mentioned. I think CDMO is a large space. If they are able to strike some new deals, then I think the market should re-rate this counter. But for the time being, it would remain in a narrow range. So I think we prefer a hold here. But HBL, I think one can definitely accumulate on every decline.
Ajit, before I go on and take a view from you on VST, I want your quick BTST strategy.
So, we are seeing, be it all the sectors, means all the key sectors, be it realty, auto, all are participating in the move. But we are seeing that the rate sensitives are one which is leading from the front. So in case if you are okay with high volatility, then Poonawalla FinCorp is one name wherein we have seen very strong recovery of late. And after a marginal dip on Friday, we are again seeing that stock has recovered strongly. We have almost paid all the losses of Friday, and we are ending closer to the day's highs. Probably we can see this momentum continuing and stock inching towards 460 area. So with stop at 432, one can accumulate Poonawalla as a BTST candidate.
Okay, all right. There's one counter that's locked in upper circuit as we speak. That's Yatra Online, and overall great set of numbers. I mean, revenue up 108%, net profit up almost 3 times, EBITDA up almost 4 times, and margins have improved to that 11% mark from a 4.6% mark. Overall, even operational metrics have improved because gross bookings have seen a good growth. The 34 new customers were signed this quarter. That gives them a revenue potential of around 200 crores for FY26. In terms of the guidance also, they've maintained their guidance so far, but the management also said that this guidance is from a conservative approach and they could do better than this as well. In fact, we also spoke to Mr. Dhruv Shringi of Yatra Online and listening to what he had to say.
I think volumes have bounced back for sure. We've seen this in the month of July and also trending into August that volumes continue to improve. There was obviously a meaningful setback in the month of June on account of the incident that you mentioned. I think what's happening is that there is a lot more consumer awareness at this point of time. I've seen customers, writing in to figure out what kind of aircraft will they be flying. So those kinds of things are great from a customer awareness point of view. But I think overall customers are still fairly confident about aviation as it being one of the safest means for transportation. So we do think numbers anyways are trending positively overall from an industry point of view, and that growth rate will remain steady. So for FY26, the way we are defining margins and how we are indicating to the market is that margin, which is EBITDA margin as a percentage of revenue less service cost, is currently around 21%. We expect that to continue to improve maybe by 100 bips to 150 bips Q on Q over the next 2-3 quarters. And for next year, we would be indicating more towards a 25% number.
Okay, all right. So that's the take coming in from a Yatra. Avinash, do you have a view on this one?
So I think, Harsh, after a very long time, Yatra has delivered very strong numbers. In fact, this has been one of its best quarters, margins improving, gross bookings also improving. And as I was telling you, this forms part of the hospitality space. Companies like Thomas Cook, Yatra, typically these are companies which are going to obviously benefit from the tailwind seen in the hospitality sector. So definitely at these levels also, if one were to take the next 12 to 15 month kind of time frame, it definitely looks promising. I believe the management guidance is quite conservative, and in fact the second half for this company could be much better because typically second half is supposed to be a far better period for travel oriented companies, and I think definitely there could be good risk reward even from the current level. So definitely we are structurally positive here.
Okay, keep in mind European shares have opened higher, the US futures are ticking higher, so all of that is looking okay for people who are thinking of going home with long positions. So that's to be borne in mind for sure. I mean, a 20% stock higher need not really get a tech check going per se, but Yatra is certainly making it count in the session today. So that's very nice. The other one which has had a couple of false breakouts, actually 2 stocks out there, Ajit. One of them is transformers and rectifiers, breaks out and then breaks down consistently. Is this today's move worth buying into? The second one that I would urge you to give me a view on is Sai Life. Was up on Friday, we spoke to the management, up another 6% today. Is there more here?
Right, Neeraj. So yes, you rightly pointed out that transformer and rectifier, there was strong volume breakout, with strong price action on fourth, followed by a decisive candle on the downside as well, negating this breakout. But at the same time, Neeraj, again we are seeing that bulls are trying to hold the short-term and medium-term averages placed around 480, 500 area. So probably this kind of like earlier, in case if this breakout would have continued, then momentum could be much higher. This time around, I believe that 565 80 could be the area where it might again face resistance from the sellers, which coincides with the previous swing high. So as of now, the risk reward is 1:1.5. So if you are okay with that, means with 500 as a stop loss, then definitely one can consider with 560.65 as a target area for trail. And coming to the SciLife, so volumes, price action, all coincides. The stock is at the record highs. So positioning is fine, but it's a very volatile counter leader. So I would recommend one should wait for any dip. In case if we get any dip, let's say around 860, 850 zone, then the risk reward is going to be much better with strong support at 790 area, and then keep on trailing your stop losses on every rise. Let's say once the stock reaches to 1000 plus zone.
Okay, so Ajit and Avinash, thank you so much for taking out the time and giving us all those insights at NDTV Profit today. Let's take a quick look at how the markets are going to close on a Monday. Let's try to pull that up, the Nifty 50 as well as the Bank Nifty. Well, trading on definitely closing on day's high point. Nifty 50 up 0.8% as we speak. The Nifty Bank also up almost 0.9% as we speak, up almost 200 odd points. Let's try to pull up the Nifty heat map and see how the counters have done in trade today. Top gainer clearly Adani Enterprises up 4.2 odd percent, followed by Tata Motors, Eternal, Grasim as well as SBI, all seeing gains of about 3 to 2 odd percent. Trent also doing well in trade today, up 2%, but some pressure in Hero MotoCorp, down by about some profit booking there after the gains it saw on Friday, down by about 1 odd percent, followed by Hindalco, BL, some counters in pressure. Let's try to pull up the advanced decline ratio, because as Harsh mentioned, it's a good day for the markets, and look at that breadth, 1275 odd advances versus that of 1000 odd decline. So that ratio is now much more than that 1:1 1:1 ratio as compared to where we started the show at. Let's also try to pull up the sectoral heat map, because probably all sectors today will end in green, and yes, except for the consumer durable side of things, because PG Electroplast, Amber, Voltas all under pressure. It's down by about 0.8%, but largely led by the PSU banks sector, that's up 2%, followed by Nifty Realty 1.8%. Nifty Defense also back in the green, up 1.2%. There's Nifty Healthcare, Nifty Auto, which is also done well. In terms of the Nifty IT, slight gains of about 0.2 odd percent, followed by metal also slight gains of about 0.3 odd percent. But in terms of where the broader markets stand, let's try to pull up the broader markets and see where the mid cap 150 and the small cap 250 are. The mid cap 150 up by about 0.6 odd percent, so gains there as well, almost in tandem with where the benchmarks are, a tad bit lower though, and the small cap 250 up 0.4% overall. In terms of the BSE 500 and some counters to specific that deserve specific mention.
Yeah, Home First up 6%. That's the one stock which is doing well. Heikel is down 7%. In fact, the top loser on the BSE 500. But along with it, some tech stocks. So you'll see a 197. Also, PB Fintech has done fairly well for itself. Voltus, we discussed that, and then you have those host of EMS players, and Amber is sitting there as well among the top losers. Of course, we don't have a PG Electroplast featuring in this BSE 500, and therefore not standing out there in terms of the names. But let's quickly look at what to watch out for tomorrow as well. And there will be a whole host of earnings which we'll be watching out for, and some of the reactions on those earnings will also be crucial to understand. But circling back on the top story as we come to an end of the trading day today is with regard to where ICICI Bank is concerned. ICICI Bank, of course, the new policy which requires customers to open accounts from August 1st, 2025 onwards in metro and urban areas to maintain a monthly average balance of 50,000 rupees or incur penalties. To gauge public reaction, my colleague Shubhana spoke with a slew of customers to understand how they are perceiving this development. Here's the report.
Imagine this. You've been maintaining 10,000 rupees in your savings account for years. But now your bank comes and says that you'll have to maintain 50,000 rupees or pay a penalty. Well, this is essentially what ICICI Bank has done over the weekend. They have increased the minimum monthly average balance requirement to 5 times over. Now, the accounts that are opened with the bank from August 1st will have to maintain 50,000 rupees as minimum balance. These are for urban and metro customers. And also, if you are not able to maintain this balance, you'll have to pay a penalty of 6% of the shortfall. Now, we've hit the streets to ask customers what is their first reaction on the steep hike.
From 10,000 to 50 is not the advisable amount. They could have made it 50% more or some percentage wise, 10 to 15 or 20. It is from 10 to they made all of a sudden 50,000. So it will be how many percentage? 500 percentage more. It should not be.
Since this is for new account holders and this hopefully won't affect the old account holders too much, they don't want the average Joe to come in anymore. They want elite customers, and hopefully it's not a fair thing actually.
महंगाई बढ़ाई है लेकिन कम रहना चाहिए था मेरे हिसाब से तो ये
कितना रहना चाहिए आपके हिसाब से?
ज़्यादा से 20,000 होना चाहिए.
We are students and parents can't afford. Not us, but not every parent can afford to give their children 50,000 to just open a bank account. So I don't find it very visible for everyone.
There are PSU banks. Go to any other bank. There are so many private banks, so many smaller, thousands of banks. I mean, there plenty of opportunity. These guys probably taking a call that will basically hurt them, I feel.
Well, for ICICI Bank, it's a move towards premium banking. But for many customers, it's a push towards finding a new bank. Either way, the 50,000 rupees minimum average balance requirement has stirred a pot in India's savings account space. And a debate over balance has just got more expensive. This is Subhana Sheikh from NDTV Profit with camera person Vijay Sartape.
हेलो बोलिए मैडम. डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahuguna. Now let's get straight into the show. So viewers, the benchmark indices claimed through the day to end the trading session near intraday highs. The Nifty and 30-pack Sensex concluded with gains of over 0.9% each. Nifty heavyweights such as Reliance, SBI and L&T uplifted the frontline indices, while Hero Moto, ICICI and BEL dragged a bit. Both the indices outperformed the broader markets, with the small cap index gaining the least. All sectors ended the day with substantial gains, with PSU Bank, Realty and Defence leading the rally. The least gains were observed by media, metal and the IT index. The advanced decline ratio also posed a healthy market breadth, with more than half the stocks in favour of the bulls. Gold prices slid over 1% today, with spot gold down to $3,362 an ounce as investors await clarity on the potential US tariffs on bullion bars following a White House statement on the issue. Attention is also turning to upcoming US inflation data, which could see, which could actually signal the Federal Reserve's next moves on the interest rates. PG Electroplast shares tanked 34% over 2 sessions after a disappointing Q1, with net profit plunging 20% year-on-year and staggering 54% quarter-on-quarter to 67 crore rupees. Margins shrank to 8.06%, which is hit by order cancellations, high inventory, rising working capital days and weakening cash flows. So while promoter stake sales added to the investor concerns, and that also makes it the stock of the day. Tata Motors reported a challenging Q1 of FY26, with consolidated net profit dropping 63% year-on-year to 3,924 crore rupees, missing the estimates of 3,972 crore rupees due to a 4,975 crore one-time gain in the base quarter. So revenue has fallen 2%, EBITDA declined 36% and margins at 9% versus 14% year-on-year. JLR's 10% wholesale degrowth, US tariffs and China's 10% luxury tax on the Range Rover models dented its profitability. So brokerages trimmed the outlook, citing JLR uncertainties. Voltas reported a disappointing Q1 of FY26, with consolidated net profit crashing 58% year-on-year to 140 crore rupees, missing the 160 crore estimate. Revenue has fallen 20% below the 4,100 crore forecast due to unseasonal rains and high channel inventory. EBITDA has dropped 58%, with margins shrinking to 4% from 8%, and this is driven by weak unitary cooling product volumes and 10-year low UCP margin of 4%. So electromechanical projects margins improved to 5%. Management expects edge to recovery with festive demand. RHI Magnesita reported a 52% year-on-year drop in Q1 of FY26 consolidated. So net profit the FY26 consolidated net profit to 35 crore rupees, missing, and they have actually missed the estimates of 50 crore rupees. So this is due to rising raw material costs, and revenue has grown 9% to 960 crore rupees, which is in line with 965 crore expectations, and this is driven by cement and iron making demand. So EBITDA fell 33% to 102 crore rupees, with margins shrinking to 10% from 17% as material costs rose to 63% of sales from 55%. So the refractory market remains competitive with pressure from the Chinese imports. Entero Healthcare reported a 28% year-on-year revenue increase in Q1 of FY26 and missing the 1421 crore estimate. So net profit rose 43% to 30 crore rupees, which is below the 34 crore forecast, and this is aided by lower tax expenses. EBITDA has surged 66% to 50 crore rupees, with the margins expanding to 4% from 3%, driven by value-added services like specialty pharma and diagnostics. So management reaffirmed a 30% FY26 revenue growth target. This is supported by acquisitions and market share gains as well. HBL Engineering delivered a stellar Q1 of FY26 with consolidated net profit soaring 79% year-on-year to 143 crore rupees, and they've beaten the estimates of 120 crore rupees. Revenue rose 16% to 602 crore rupees, which is in line with 600 crore expectation. So this is driven by a 106% surge in the electronics segment. So EBITDA has jumped 74% to 192 crore rupees, with margins expanding to 32% from 21%, and this is fueled by operating leverage and cost efficiencies. And other income also surged to 60%, though employee costs rose 36%. So defense segment sales also dipped while work in progress inventory fell. State Bank of India reported a 12.5% year-on-year rise in the Q1 of FY26 standalone net profit to 19,160 crore rupees, which is beating the estimates of 17,095 crore rupees, primarily due to 6,320 crores in the treasury gains. So revenue fell 0.3% to 1.18 lakh crore rupees, and they've missed the estimates, while EBITDA grew 15.5% to 30,544 crore rupees. Margins faced pressure, with domestic NIM down 33 basis points year-on-year to 3.02%. Asset quality has improved, with gross NPA at 1.83%, and brokerages are mixed. Jefferies and Morgan Stanley are positive, while Macquarie sees limited upside due to margin and treasury challenges. BEML, a state-owned company under India's Ministry of Defence, has clinched its first international rail and metro contract from Malaysia, valued at $1 million, awarded on August 9 of 2025. The contract involves retrofitting and reconditioning Malaysia's mass rapid transport system, marking BEML's global debut in the rail metro segment. So the deal aligns with BEML's strategy to expand internationally, leveraging its expertise in rail, defense, and aerospace. Meanwhile, BEML also reported its Q1 earnings, with the revenue holding steady at 634 crore rupees, which is matching the last year's figure. However, the company has posted an EBITDA loss of 49.3 crore rupees, which is slightly improved from a 50.1 crore loss year-on-year. So the net loss narrowed to 64.1 crore rupees from 70.5 crore rupees. But BEML remains in the red amid challenges aligning with market expectations. Shilpa Medicare has received Central Drug Standard Control Organization approval for Norutka tablets, making it the first company globally to launch a treatment for non-alcoholic fatty liver disease in India. So the approval announced on August 9 follows successful phase 3 trials showing 83% liver fibrosis reversal and 90% alt normalization in 165 patients. So NAFLD affects 188 million Indians. The company plans immediate India launch and global regulatory outreach. EDGI Infra Engineering, in a joint venture with DEC Infrastructure and Projects, has been awarded 2,100 crore rupees of contract by the Rail Land Development Authority for redevelopment of New Delhi Railway Station. Announced on February 6 with appointed date set as August 6, the 45-month EPC project aims to modernize the station into a world-class transport hub with a multimodal integration and transit-oriented development. Now, Goodyear India's Q1 of 2025 earnings show a tough quarter. Revenue has dropped 5.1% to 656 crore rupees from 691 crore rupees year-on-year. Net profit has fallen sharply by 43.6% to 14.1 crore rupees from 25 crore rupees. EBITDA also declined 21.2%. Now, with margins shrinking to 15.4% from 18.6%. The company has faced challenges from higher raw material costs and weaker demand impacting the profitability. Yatra Hospital and Trauma Care Services will join the MSCI India Small Cap Index starting August 26 of 2025. Now, this will boost its visibility among global investors. The stock rose over 1% to 715 after the announcement, hitting a record high of 738.2 rupees. Now, Yatra operates 7 super specialty hospitals in North India with over 2,300 beds. Now, the hospital player reported a 38.4% profit increase to 42 crore rupees and 21.7% sales growth to 258 crore rupees in Q1 of 2025. Eureka Forbes Q1 revenue increased by nearly 10% to 608 crore rupees, which is up from 553 crore rupees in the same quarter last year. So the companies increased by over 9% to 61.5 crore rupees. Now, despite there's growth in the revenue and EBITDA, the company's margin has remained flat at 10.1%. So the company's net profit saw a significant jump of over 20% to 38.7 crore rupees. Therefore, overall, Eureka Forbes reported a strong Q1 performance, which is driven by revenue growth and improved profitability. Ipca Laboratories delivered a robust Q1 with consolidated net profit surging 21.3%. Now, revenue has climbed 10.3% to 2,309 crore rupees, while EBITDA has risen 6% to 416 crore rupees. However, margins have dipped slightly to 18% from 18.8%, reflecting strong growth driven by domestic and export markets. Bajaj Consumer reported a solid Q1 with revenue up 8.4% at 267 crore rupees compared to 246 crore last year. EBITDA grew 10.5% to 40.5 crore rupees, boosting the margin slightly to 15.2% from 14.9%. Net profit saw a modest 2.2% rise to 37.9 crore rupees, reflecting a steady performance in a competitive market. In July 2025, India's pharma market grew 7.9%, fueled by higher prices and new product launches, matching its steady 7 to 8% growth trend. So, however, overall sales volume dipped slightly by 0.2%. Top pharma companies outperformed the market, with cardiac drugs leading as the fastest growing category. Oncology drugs also saw strong volume gains. Older top 40 brands lagged behind the market's growth, while the newer GLP-1 drugs like RYBEL, SAS gained significant traction. The CCI is digging deeper into claims that quick commerce giants Blinkit, Instamart and Zepto are unfairly dominating the market. Following a March petition from FMCG distributors, the CCI is seeking more details on their deep discounting and business practices, which may violate the Competition Act 2002. Now, the regulator plans to review an inspection request once the petitioner provides additional evidence. As per a news report, the Reserve Bank of India sold at least $5 billion in US dollars to support the weakening rupee, which is nearing a record low. So the report stated that the sales happened in both domestic and international currency markets. Now, if this continues, August 2025 could actually see the RBI's biggest monthly dollar sales since January. So the move is aimed to, stabilize the rupee amid this growing economic pressure. TCS has partnered with Now Corporation to strengthen the Philippines' national digital infrastructure and promote financial inclusivity. TCS will provide its expertise in cloud technology, cybersecurity, and digital transformation to support the Philippines' digital growth. The partnership will also focus on developing citizen-centric services such as digital private infrastructure, healthcare, and digital banking to provide financial inclusivity. Tesla has opened its new experience center in New Delhi, marking a significant development in India, the chapter of the US automobile major. Now, the Delhi center of Tesla is located at World Mark III in the AeroCity area of the national capital. Now, it will offer visitors an opportunity to explore Tesla's latest electric vehicles introduced in India. NVIDIA and AMD, two major US chip makers, have agreed to pay the US government 15% of their revenue from AI chip sales in China to secure export licenses. Now, this deal, as per news reports, involves NVIDIA's and AMD's chips and follows a meeting between NVIDIA CEO and President Trump. So, the arrangement reverses a prior ban on these chip sales to China, but it sparked concerns among trade experts about mixing the national security with financial deals. So, China is a huge market for both companies, with NVIDIA earning $17 billion and AMD $6.2 billion there last year. Intel CEO is set to visit the White House today. This comes after President Trump demanded his resignation last week over ties to Chinese firms. So Tan is facing scrutiny for investing $200 million in Chinese chip companies and aims to explain his background and commitment to the US security. So he may propose ways Intel can work with the government to strengthen the national interest. Now, the visit follows rare public call from Trump for Tan's removal, sparking debate among the investors. In July 2025, Indian investors poured a record 28,464 crore rupees into the mutual funds through systematic investment plans. Now, this is up 4% from 27,269 crore rupees in June. Now, this surge shows growing trust in the disciplined long-term investing despite market ups and downs. Now, total SIP assets under management also rose slightly to 75.1 lakh crore rupees from 74.14 lakh crore. This is reflecting, steady retail investor participation in India's financial markets. President Donald Trump took to Truth Social late Sunday, urging China to quadruple its US soybean purchases to address its shortage and reduce the trade deficit just before a critical tariff truce deadline. So the call has spiked Chicago soybean prices by over 2%, but experts doubt China, the world's top soybean buyer, can shift so heavily from Brazilian imports. Starting today, the Indian and Pakistan navies will hold separate military drills in the Arabian Sea, just 60 nautical miles apart. India's exercises off Gujarat's coast involve warships and possibly aircraft, while Pakistan's navy will conduct firing drills in its waters. So both have issued airspace warnings for August 11 to 12, the time following recent tensions from India's Operation Sindoor after a deadly April terror attack highlights ongoing rivalry in this key maritime region. Union Minister Nitin Gadkari took a subtle jab at the US, saying countries that bully others or do dadagiri have strong economies and advanced technology. Now, speaking in Nagpur, he urged India to boost exports and innovation to achieve self-reliance. Now, this comes after the US imposed a 25% tariff on Indian goods, citing India's Russian oil imports. Now, Gadkari emphasized India's culture of global welfare, not dominance, and called for research to triple the economic growth. Delhi police detained senior opposition leaders including Congress Rahul Gandhi, Priyanka Gandhi Vadra and Mallikarjun Kharge, along with Samajwadi Party's Akhilesh Yadav and Shiv Sena's Sanjay Raut and Priyanka Chaturvedi. Now, during this heated protest in central Delhi, now the India bloc, the I.N.D.I.A bloc MPs were marching to the Election Commission, alleging its collusion with the ruling BJP over voter roll issues. India's officially spokesperson issued a statement slamming Pakistan's Chief of Army Staff for his recent remarks made during a visit to the United States. So the spokesperson described Pakistan's behavior as nuclear sabre rattling, now implying that the country is recklessly threatening nuclear war. The statement expressed concern that Pakistan's military is closely tied to terrorist groups, which raises doubts about the safety and security of the country's nuclear arsenal. India views Pakistan's actions as irresponsible and a threat to regional and global security. 5 Al Jazeera journalists, including prominent correspondent Anas Al-Sharif, were killed in an Israeli airstrike targeting media tent near Al-Shifa Hospital in Gaza City. The attack, condemned as a deliberate assault on the press freedom, has drawn global outrage. Israel claims Al-Sharif was a Hamas operative. A 6.1 magnitude earthquake struck Turkey's Balıkesir province, killing 1 person and injuring 29. Now, the quake centered in Sindirgi collapsed 16 buildings and was felt as far as Istanbul. Now, 81-year-old woman died after being rescued from rubble. Now, search operations have concluded with no further casualties reported. FC Barcelona lifted the 2025 Joan Gamper Trophy after a commanding 5-0 victory over Como 1907 at Estadi Johan Cruyff. Now, young stars Fermin Lopez and Lamine Yamal each netted 2 goals, while Rafinha sealed the rout. The historic first meeting between the clubs showcased Barcelona's attacking prowess under coach Hansi Flick. This is setting a strong tone for the upcoming La Liga season. Crystal Palace stunned Premier League champions Liverpool to claim the 2025 FA Community Shield at Wembley Stadium. Now, the match ended draw with 2 goals each side. In the penalty shootout, Palace goalkeeper Dean Henderson saved 2 spot kicks, securing a 3-2 victory and their first ever Community Shield title. With that, viewers, it's a wrap on this edition of Market Express, but please don't go anywhere and stay tuned.
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम, एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Nifty logs the best closing since the 26th of June, gains close to 1% to close above 24,500. Sensex closes at over 700 points. All sectors end higher, with Nifty PSU Bank as the best performing sector. July sees record SIP inflows of more than 28,400 crore rupees, with thematic mutual funds witnessing the highest influx ever of 9,400 crore. NFOs drive the inflows into actively managed funds. The government continues to defend E20 petrol, claiming reduced CO2 emissions while dismissing car owners' reports of major mileage loss as unsubstantiated and not backed by scientific studies or expert analysis. The Finance Ministry expects 55% of exports to the US that will face reciprocal tariffs, adds that the terms of contract and quality will influence export resilience. The government tables the Taxation Laws Amendment Bill 2025 in Parliament, bringing in big relief for partnership firms and family offices. The latest version proposes to drop adverse alternative minimum tax. FMCG sales show early signs of recovery ahead of festive season. Sales were driven by chocolates and confectionery as retailers prepared for Raksha Bandhan. Rural sales grew by over 10% in July, while urban sales growth remains stable at 6%. The Delhi police detains opposition MPs including Rahul Gandhi, Priyanka Gandhi Vadra and Sanjay Raut while protesting outside the Election Commission's office against the special intensive revision of electoral rolls in Bihar. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Over the next half an hour, we're going to bring you the latest in markets as well as national and international news. So let's dive right into it. It's our top focus this evening. There's been big relief for partnership firms and family offices in the new income tax bill, which has been tabled in the parliament today. The adverse alternative minimum tax proposal has also been dropped in the latest version. My colleague Shrimi, who's been tracking this relentlessly, now joining me live with more on the story. Shrimi, take us through all of the crucial changes that we're going to be seeing in the income tax bill.
Yeah, certainly. So, it's 600 plus pages, the fresh version of the new income tax bill, and it was introduced by Finance Minister today in the Parliament and the Lok Sabha. And some of the key amendments as we, continue to decode the bill, because it has so many provisions. So what we have so far found that the adverse alternative minimum tax, the AMT, has been dropped in the final version of the bill. So, of course, there is a huge relief to limited liability partnership or any family offices who are actually operate as partnership firms. As you remember, in the draft proposal, there were confusion around that the AMT, the minimum tax proposal, has expanded the scope of, the tax provision, and there will be all the limited liability partnership will be the part of that scope. Not now, the government is clarified that in the final version, saying that there would not be any capital gains tax on limited liability partnership, and that is reflected in the final version of the bill. The second important point here is what we understand in the latest version is that government maintains the status quo on the loss carry forward provision. Now, this is very interesting again, because the select parliamentary panel actually proposes that you should introduce beneficial ownership concept for loss carry forward provision, but that was not accepted. And in fact, there were no clarity in the final version. The third important aspect is, of course, on the associated enterprises. Now, there were, certain ambiguity on the part that what will be the threshold of the shareholding in terms of associated enterprises. So that clarity has also come in the final version. What the bill is now saying that whatever the shareholding limit must be met at any time during the financial year. Earlier, it was not clear where that requires in the beginning or during the financial year. So that was also clarified. Apart from that, several select panel recommendation has been accepted, including that anonymous donation and the TDS refunds, etc.
Right, Shrimi, thank you so much for bringing us that update. We'll continue coming to you for the key developments. Remember, this is as the new income tax bill has in fact been tabled in Parliament. Moving on, let's take a look at how the markets fared today. It appears that there has been no Monday blues for the markets, with the Nifty 50 and the Sensex ending higher, nearly 1%, rebounding sharply from Friday's lows. Broader markets ended higher but underperformed benchmark indices. All sectoral indices ended in the green, with Nifty PSU Bank being the top gainer. My colleague Harsh now joining in for a quick wrap of the market action.
Well, we had a couple of tough weeks, right? And today was a bit of a bounce back. Monday blues completely brushed off by the index. We've closed around 0.8% higher. Best day of intraday close since probably the end of June, 26th of June is what I'm told. It's the best intraday move that the Nifty has made since that date. So solid move, largely led by the breadth. So it wasn't like the heavyweights aided the index or the like, but IT banks were certainly finding favor in trade today. The IT index was up 0.5%. The banks were also up 0.8, largely in line with the Nifty, and that of course aided the Nifty. But outside of that, it was just the breadth which was extremely strong. Nearly 40 stocks clocked the green on the Nifty 50, which is clearly what has led to that uptick. 4% higher on an Adani Enterprises. That's the one stock that really stood out in trade among others. The other one was Voltus, of course, which was under pressure on the back of numbers, of course, but that's within broader markets. Along with that, the consumer durables index within sectoral indices faced some heat on the back of those numbers, and also a PG Electroplast continued to face heat. So that was broadly the way in which the market moved. But let's talk a little bit about sectors as well. Pretty much all sectors in the green, outside of that consumer discretionary sector, which faced some bit of headwind due to Voltus's numbers. When you're looking at the broader markets as well, the breadth was extremely choppy pretty much through the day, but we closed the day with the breadth in the green. 1200 odd advances to just about 1000 declines. That was roughly the ratio. And the Nifty mid cap index and small cap index underperformed the large cap, courtesy the breadth on the large cap, which was extremely strong. So the mid cap index was up just about 0.6%, and the small cap index was up a little less than 0.5% odd in trade. So that's how it played out overall. The BSE 500, of course, plenty of gainers, losers. Amber was one of those within that EMS pack, which faced some amount of heat among the losers, but broadly on the back of numbers, some reactions with regard to those numbers coming through on the BSE 500 in terms of names.
Right, Harsh, thanks for that. And moving on, India has introduced E20 petrol, adding 20% ethanol nationwide, 5 years ahead of a schedule. But a wave of drivers is actually pushing back, reporting lower mileage, engine trouble in older vehicles, and demanding choice at the pump. Now, the government counters that the claims lack any technical backing, while a minor dip in fuel efficiency around 1 to 2% for newer cars and up to 6% for older ones may occur. It maintains that routine servicing can address it. Let me quickly go across to my colleague Aishwarya for more on this, and she also spoke with customers about their views on E20 petrol.
Here in New Delhi at this petrol pump, we have been speaking to a few of the consumers queuing up to fill up their tanks here, and the board behind us, as you saw, says ethanol blended petroleum. Few are aware that 20% ethanol is being blended across petrol pumps across the country. In fact, online what we see is a heated debate brewing. On one camp there are skeptics, and on the other those who are in favor of the E20 petroleum being blended at these retail pumps. In fact, a survey conducted recently which says that E20 should be rolled back. This was a survey involving about 36,000 vehicles across 300 districts, and about 44% of them have demanded a rollback because they've claimed claimed that there's been mileage drop that has affected the performance of vehicles and also impacted the engines. That is one camp. The other side, of course, is the government side, and they are saying that SIAM and ARAI tests have proven that this is economically beneficial and also environmentally friendly. In fact, Union Ministers Hardeep Singh Puri and Nitin Gadkari have both thrown an open challenge, saying that if you spot even one vehicle with any sort of issues being faced as far as the engine is concerned, he would like to be notified about that. So here are two camps, one criticizing it and the other for E20 blended ethanol.
Interestingly enough, I'm not seeing any discernible difference. As you can see, 89 mileage, maybe a little bit here and there.
Yeah.
Although I'm not entirely certain. I think I'll have to use it a couple of more times before I can give you a...
अगर इंजन परफॉर्मेंस उसमें नहीं अच्छी आएगी या फिर एवरेज भी कम आ रहे हैं गाड़ी के सुनने में तो ये भी आ रहा है तो फिर तो बेकार है.
लेकिन if government is saying something तो it is better for the public.
If it is suitable for the environment, it is good. If it is not suitable for the environment, then it is not good for the car or the car owners.
हाँ फ़र्क तो है, मतलब एवरेज में भी फ़र्क आता है और उसका जल्दी से सर्विस मांग जाता है गाड़ी. जो इंजन खोलता है उस समय पे तो उस समय उसका जो पार्ट्स अंदर जो चलता है तो वो मतलब घिस जाता है.
आपको इसके बारे में जानकारी थी कि ये ब्लेंडेड आ रहा है पेट्रोल?
जी जी जी.
And to give us more insight into this, we have Puneet Gupta, Director S&P Global Mobility India and ASEAN. Thank you so much for joining us this evening and welcome to NDTV Profit. Puneet, first give us your assessment of the E20 fuel rollout impact on India's automotive market, especially with most vehicles on the road not really being E20 compliant.
Great. So thank you, Sanjana. It's great to be here. But first to begin with, E20 is definitely a great initiative by Indian government. Particularly in terms of environmental perspective and also from energy security perspective, right? So, but another thing is that obviously once you blend ethanol with gasoline, so the fuel chemistry changes, right? So, and when your fuel chemistry changes, obviously it will have some impact because ethanol is a low energy density fuel, almost 34% less than gasoline. So it means that you are mixing something, which has a less energy, and basically that will result in reduction of mileage. So I think, there is a feedback from the customers online and, from the surveys, which have been done, so clearly that's a pain point, for the customers today. And that is what we have been hearing. But then another problem is that the vehicles which are on the road, right? So they are not obviously E20 compliant, and the parts which were fitted in them, so obviously because of ethanol, there is always a risk, because ethanol is hygroscopic, right? So there is a risk of, water absorption, which can actually lead to corrosion, and it can also lead to softening of rubber parts, for example, hoses, seals, gaskets, right? So also obviously, on the old vehicles, these were not compatible. The new vehicles which are coming now, specifically after 1st April 2025, are flex fuel compliant, E20 compliant. And so there the validation of the parts have already been done. So there won't be any problem using E20 fuel. But for the older vehicle fleets, yes, there can be cases, which can emerge.
So, Puneet, can you comment on the automotive aftermarket? Let's talk about service, maintenance. Oh, we also have Hormuz joining us. Hormuz, let me then pose this question to you. Hormuz Sarabji, welcome to NDTV Profit. And if you could tell us, how is the automotive aftermarket? So, like I was just saying, service, maintenance, parts, how is that adapting to E20, especially regarding the need to replace a rubber fuel system components more often?
Yeah, well, I think, firstly, these are genuine concerns of motorists. Sure. I think, obviously, with E20 and ethanol, the corrosive nature is the biggest worry. Having said that, to be honest, some of it is a bit overblown. There's not going to be a catastrophic engine blow up or a failure. It's a cumulative, it takes time. So these parts will wear out faster than they've been designed to. Some of them will. I mean, some brands, in fact, if you speak to them off the record, they have been E20 compliant for quite some time now. You might have a company like Toyota, which has been E20 compliant since the last 10 years. But they're not going to say this right now because, they don't want to have any liability if anything happens. But I think fundamentally, this is really an opportunity for brands to kind of give let's say kits which you can retrofit and replace the parts which would be susceptible to corrosion and wear from the hygroscopic nature of ethanol with materials that are resistant to this sort of corrosion. And I think it's theoretically it's easy. Practically, it's also very difficult because when you start going really back into time and into cars which are 10, 12 years old, that becomes a lot more difficult because some of the cars have been discontinued. You can't let's say remake those parts with the new materials. But I think it's going to be the motorist is going to feel some pain. How much pain is something that is going to be very dramatically on a lot of things, how the cars are maintained, which are the brands, what kind of engines they are. Sometimes the older 1.2 NA engines where the ECUs are very basic and they can't adapt to the new fuel, they'll be affected more. New turbo engines, they'll take quite well to E20 because E20 has a higher octane rating, which no one has spoken about. In fact, the octane rating has jumped from 91 of the base fuel to 95. And that in itself, gives you much more performance, though the fuel efficiency is a concern, and that does take a bit of hit. So it really varies, and it will vary widely because it depends on driving style, maintenance, the kind of engines they are, how far back you go. So it's very hard to even put a percentage. So in some cases, the effect might be minimal, while as in older cars, it will be a lot more.
Right. Thanks for breaking that down so simply. Puneet, then can you elaborate on maybe your analysis, S&P Global Mobility's analysis that was regarding engine compatibility and the risk to older vehicles from E20? I know that you went into it in some detail, but in terms of mileage, in terms of engine health concerns that have been reported by car owners.
Yeah. To further deep dive, so if you see ethanol, primarily, as I said, it is 34% less energy density than oil, and if we compare it as 23 megajoules, per liter compared to gasoline, which has something around 34 megajoules, per liter of energy. So clearly, when you mix two, so it's bound to, happen that the energy, the chemical energy in that new fuel will obviously be less. And that is what is most of the customers are reporting, because at the end of the day, you are burning something which has less chemical energy. Because, if you see ethanol is actually a partially combustion has already happened in that fuel because the oxygen there is bonded, already with hydrogen and carbon compared to gasoline. So clearly, that's one of the reasons why in ethanol, the energy density is relatively less than gasoline. And another part is like, as Humad said, one of the good points about ethanol is also it reduces knocking, right? And it's very clear, that if you actually fine tune your ECU and your engine, then actually this can lead to better performance of the vehicle, better power, in the vehicle. So for us, obviously one of the concerns, for the existing car park in India, will obviously be will be the maintenance issues, which may go and pop up, may not be in every car, because there is always a tolerance factor on which OEM works, So I think that way we may see, such issues not popping up in every car, but we feel that in certain, cars, there may be such issues which may pop up because India climatically is also pretty different, right? For example, in cold cities, right? So we may actually see some kind of starting issues, because in some cases, because ethanol has a solvent property, so it can actually lead to clogging of fuel systems or fuel pipes, which can result, but it may not be in most of the cars, but in one of our case it will be there. And we hope, because this is E20 is a nation initiative and is something good for the country.
Okay.
Because this brings us to self-reliance.
Right.
So clearly great move, by the government. Yeah.
Okay, thank you so much for that, Puneet and Hormuz, for very comprehensively giving us a sense of whether this is a temporary bridge or a long-term solution in India's fuel mix, and of course laying it out very, very clearly for that. Moving on, a day after ICICI Bank hiked their monthly minimum balance requirement to 50,000 from the earlier 10,000 rupees, the RBI has now issued a clarification. Speaking at a financial inclusion event in Gujarat, RBI Governor Sanjay Malhotra stated that the issue does not fall under the central bank's regulatory domain and that banks are free to decide their minimum balance requirements. Remember, ICICI's new rules are applicable for saving accounts open from August 1st, while salary accounts have been exempted from this.
देखो, ये जो मिनिमम बैलेंस की जो बात है, जो मिनिमम बैलेंस का जो आप बात कर रहे हो, वो उसके अंदर में रिजर्व बैंक ने सभी बैंकों के ऊपर में छोड़ा है कि वो किस प्रकार का मिनिमम बैलेंस वो रखना चाहते। तो अब किसी बैंक ने 10,000 रखा है, किसी ने 2,000 रुपये ने माफ़ भी किया हुआ है, लेकिन ये रेगुलेटरी डोमेन में नहीं है आज।
And even as ICICI Bank's new rules come into force, NDTV Profit hit the ground to see what account holders are saying about this fresh move from unfair to targeting the elite. The bank's action has been met with strong criticism. Let's take a look at this special report filed by my colleague Shubhana, who spoke to some of the bank's customers.
Imagine this. You've been maintaining 10,000 rupees in your savings account for years. But now your bank comes and says that you'll have to maintain 50,000 rupees or pay a penalty. Well, this is essentially what ICICI Bank has done over the weekend. They have increased the minimum monthly average balance requirement to 5 times over. Now, the accounts that are opened with the bank from August 1st will have to maintain 50,000 rupees as minimum balance. These are for urban and metro customers. And also, if you are not able to maintain this balance, you'll have to pay a penalty of 6% of the shortfall. Now, we've hit the streets to ask customers what is their first reaction on the steep hike.
From 10,000 to 50 is not the advisable amount. They could have made it 50% more or some percentage wise, 10 to 15 or 20. It is from 10 to they made all of a sudden 50,000. So it will be how many percentage? 500 percentage more. It should not be.
Since this is for new account holders and this hopefully won't affect the old account holders too much, they don't want the average Joe to come in anymore. They want elite customers, and hopefully it's not a fair thing actually.
महंगाई बढ़ाई है लेकिन कम रहना चाहिए था मेरे हिसाब से। तो ये
कितना रहना चाहिए आपके हिसाब से?
ज़्यादा से 20,000 होना चाहिए।
We are students and parents can't afford. Not us, but not every parent can afford to give their children 50,000 to just open a bank account. So I don't find it very visible for everyone.
There are PSU banks. Go to any other bank. There are so many private banks, so many smaller, thousands of banks. I mean, there plenty of opportunity. These guys probably taking a call that will basically hurt them, I feel.
Well, for ICICI Bank, it's a move towards premium banking. But for many customers, it's a push towards finding a new bank. Either way, the 50,000 rupees minimum average balance requirement has stirred a pot in India's savings account space. And a debate over balance has just got more expensive. This is Subhana Sheikh from NDTV Profit with camera person Vijay Sartape.
And we will actually take this forward at 6 p.m. this evening on The Big Question, where we have lined up an array of experts who decode if ICICI Bank's move is an attempt to attract the elite or will it exclude the majority. So tune into NDTV Profit to catch the conversation live. And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? Hello and welcome. You're watching NDTV Profit. I am Harsh Saita and you're watching Know Your Company. Now today we're going to try and analyze TVS Supply Chain. It's an interesting play because one, it has been listed since August of 2023 and has given investors negative 33% growth since that point of time. Does supply chain really warrant that? Maybe not, but there's a shift happening. The top line shift is happening towards higher margin product and therefore all of that will likely aid the bottom line. The expectation is a double-digit growth in FY26 and thereafter too likely a double-digit growth. They are targeting a 4% PBT from a loss currently. All of those levers are likely going to change the way the business is going to be looked at. I am trying to dive deeper and trying to understand whether in this current environment, and there's a lot happening, right, geopolitically as well as on the tariff front, what's the likelihood of a double-digit growth in the current financial year? Because you have this company, 73% of the top line comes from international operations, and therefore, could that risk this particular guidance? That's my first point. My second point is with regard to what will drive this double-digit growth. And what I'm trying to delve into is trying to understand whether there is sustainability of that growth beyond FY26. What's the visibility like? What's the sustainability of that growth number looking like? The third piece is the PBT margin and the lever for it. So first one is what's the likelihood of a 4% PBT margin? This is by FY27. This is the guidance given. And thereafter, what are the levers which the company is going to utilize to get to this number? Because right now you're a far cry from it. You're at sub 1% in terms of that margin number and you're at a loss where the PAT number is concerned. Thereafter, so what will be the levers as well? The fifth point that I'm looking for is the risk on the global geopolitical as well as the tariff situation. All of that is leading to heightened uncertainty. But what are they seeing on the ground with regard to demand? Is demand remaining largely solid? Is it remaining largely robust? Are customers not shifting away from the supply chains that they've built as of now? And last one, how much are you growing? What's next for the India business? As they shift from India or within the India business towards a higher margin business, are they looking for what are the levers they're looking for and how are they looking at the India business in particular is what I want to understand. So all of that and more, but essentially the bottom line is, can they do that top line guidance? Can they do that bottom line guidance? And thereafter, we'll try and understand what the re-rating could be as a result of that. So that will be the key which I'm looking out for. Let me now quickly start off with what the company does. And TVS Supply Chain It provides logistics and supply chain management services. It's tech-led, asset-light in terms of its business model. It operates in 26 countries with its headquarters in India. 6,200 active customers globally is what it has. And it focuses on long-term contracts with Fortune 500 companies. So it's looking at companies with scale and size, both. And that's what they're really looking for. In terms of its services, and I've tried to keep this as simple as possible in terms of what services it provides. The first set of services is integrated supply chain solutions. Let me simplify this for you. It's simple. You take on a project from a customer. Say, for example, it's a plastic bottle manufacturer. What will they do? They will source plastic from somewhere, right? So the plastic will have to be sourced from a supplier. TVS Supply Chain will do that for the manufacturer, supply the raw material, right? Transport the raw material from the vendor to a warehouse, and thereafter transport the raw material from the warehouse on a need-based or a requirement-based timeline to the factory. Thereafter, take the finished goods from the factory to a distributor warehouse, and thereafter enable the distributor to distribute it further. All of that is currently being done by a TVS Supply Chain, and that's the type of service that they're doing. Integrated supply chain solutions. That's what it means. Second one is network solutions, which is moving product efficiently. Now, whether this is from a global shipping standpoint, from one country to another country, or it's moving product efficiently within a factory. In-plant logistics, cold chain logistics, all of that is what network solutions is all about. We'll look at the split in terms of the top line now, and that's the split. 55% is integrated supply chain and 45% is network solutions in terms of the top line. That's the split. Mind you, integrated supply chain is a higher margin business. They're guiding for 9.5-10% margins there. Network solutions, they're guiding for a 7% margin. So that's something you want to keep in mind. Now let's look at the geographic split. They do just 27% of their business from India. 73% is international. The other piece you want to know is the revenue mix, and that becomes important as each sector likely slows down, another sector gears up. That could well influence some of the numbers as well. They have a fairly diversified pie in that sense. Last off, customers. They service 91 out of the Fortune 500 companies. So 91 customers out of the 500 top companies globally is what they have on their customer book. The customer contracts are usually 3 to 7 years. You look at the way in which some of the customer contracts are slated. Europe over UK over North America, NA is North America, and over India. So India in terms of pecking order is probably the last, but Europe is the largest focus, and that's good news given the tariffs coming from here. What you also want to see is the contract duration, which gives you certainty on how long the contract can last for. So the average contract duration is 3.9 years for India, 4.2 years for North America, and 7 years for Europe. So you've got far more certainty coming out of Europe than out of India. But nonetheless, it's a company based out of India, and therefore you're okay with living with that kind of a risk. So broadly, that's all about the company. Now let me quickly take you through the metrics we'll dive into, and we'll dive into it very, very quickly. We'll start off with the income statement, the balance sheet, the cash flow, the return ratios, the shareholding, street cred. Thereafter, we will look at outlook and we'll dive into valuations. And some of this is subjective, so you want to keep and monitor this one if you were to look at this. So let me start off with the income statement. Very, very unimpressive, but they've held on to the top line. They've got a decent order book. They've got decent recurring revenue. We spoke about the contracts which they have as well, 7 years. So therefore, there's some bit of certainty with regard to that top line number. And hence, we've given this a neutral, even though it's a very uninspiring set of numbers that you can see on your screen. Nothing at all that really stands out. 3% growth ideally would have been a thumbs down, but for the fact that some of the factors which I've just listed. In terms of Q1, performance was strong, but outside of a one-off, it was largely a subdued performance, just 2% YOY growth seen. Let me talk about margin trajectory now. the margins have largely been very, very range bound between 6.7 and 7.7. So very, very range bound margins, more so between 6.7 and 6.8. Broadly, that's the take. Let me now look at the balance sheet, and we've given this, of course, a neutral for you to remember. Balance sheet, book value is at 1800 crore, market cap is at 6000 crore. The borrowing number is roughly 860 crore. Now, mind you, some of the borrowing number is, or a predominant chunk of it across years is short term, and that is because the receivables and some of the working capital requirements which the company has to set aside is large, which is why you've got that borrowing number which is elevated, and those receivables are back to back. So as soon as they receive the amount, they pay it off and they close the short term borrowing number. That's what you want to keep in mind. That's part of the structure of the business. That's just how the business is structured. Balance sheet kind of gives you that. Cash, enough and more cash. 600 crore on an 860 crore borrowing, no concerns at all, and therefore we've given this a thumbs up. So just perspective. Quickly on to cash flow, and this will also reveal some stuff. FY24 was a year where they did not use factoring. What is factoring? They have some receivables, they go to a bank with those receivables, they tell the bank, you keep 2%, give us the balance amount, that frees up cash in my books. That's what they did up to FY23. FY24 post the IPO, they didn't need that cash. Therefore, they said, okay, let it sit in receivables, which is why you're seeing the sudden drop in CFO to EBITDA. That's where the mismatch is coming from. FY25, again, it's smoothened out because all of that working capital which is blocked, there's not been an increase in that working capital, which is why you're seeing what you're seeing. So no concerns with regard to this one either. We've given this one a thumbs up as well. Now, let's look at return ratios. Again, very uninspiring. Thumbs down on the return ratios. Mid single digit, not looking good at all. So we've given this one a thumbs down. Shareholding, 43% held by the promoter group. FIIs on your screen, so is DIIs, public too. Now, given that this is sub 50% held by the promoters, as we always do, we've given this a neutral on that count. Now, let's talk about street cred. Again, the numbers very, very uninspiring. You look at the returns which shareholders have got, well, it's a tough one for a shareholder to continue to hold. Therefore, we've given this a thumbs down. Now, let's look at the outlook. And in the outlook, they've guided for double-digit growth in FY26. They've guided for 4% margin in FY27. And they've said EBITDA margin guidance for ISCS, which is 55% of the top line, we spoke about that, is 9.5%. And for the network services business is just 7%. Broadly, that's the take. What I've done is I've just extrapolated a 10% top line growth for FY26 and FY27, not even higher than 10%. And what I've thereafter done is given a 4% PBT, 3% PAT number to this and given it a valuation. So what we've done in terms of the valuations is we have given outlook a neutral. We'll want to see whether that execution actually plays out. And valuations, this comes to around 18 times price to earnings. What this does versus some of the competitors on your screen. So that gives you a perspective with regard to valuations as well. Beg your pardon. So that's how it plays out. Overall, let's stack up all of the metrics on a TVS supply chain, and what it will give us broadly is a 4 out of 8 on our KYC ratings. That's how it all stacks up. Of course, a tough environment that the company has gone through, but can they turn it around? And we'll speak with the management right off to try and understand that. Let's go across. We have Ravi Vishwanathan, who's the managing director at TVS Supply Chain, who's come in to speak with us today. Sir, let me start off apologies. We have Ravi Vishwanathan, but we also have R. Vaidyanathan, who's joining us, who's the Global Chief Financial Officer of TVS Supply Chain. Apologies for that. Mr. Vishwanathan, let me start with you first. Let me try and understand, is this 10% growth FY26 possible in this environment? Is this high levels of uncertainty at this point? So give us a perspective on that first off.
No, thank you so much for having us, and it was good to see your coverage.
Thank
Let
you.
me start by saying our business has got two components, right? The ISCS segment and the global freight business.
Yes.
The global freight business definitely has, dependency on all of the uncertainty that's going on, that we are all talking about on a daily basis. And that's something which is creating a lot of volatility. But if you look at the integrated supply chain business, it's a steady business. It's got large contracts, like you pointed out in your analysis. It is long term and it gives us sustainable margin growth. So if I look at your question on, is the 10% possible? I look at the lead indicators. The lead indicators are the pipeline. The pipeline is 5,300 crores and it's continuously been improving. If you look at it from what we've been publishing, and every year we typically have about 10% revenue coming from new business. So this is something which we are comfortable with. Our pipeline gives us good, I would say, confidence getting out of Q1. Of course, how the macro plays out is anybody's guess. At this point in time, I think the ISCS business is relatively calmer. The global freight business is definitely a bit more volatile. So I hope that gives some color to what I was trying to give as a response to your question.
Certainly does, Mr. Vishwanathan. And before I go to Mr. Vaidyanathan, let me ask you one more. FY27, what is that growth number that you'll be looking for?
So our guidance is to double-digit growth. We would like to get to mid-teens, given the pipeline and some of the advanced stages. Some of the large deals are in the pipeline. There's every confidence that in FY27 we should get to early teens, if not mid-teens, in terms of revenue growth. But I think the key for us is the PBT. We are on a strategic transformation program across the company, and our commitment towards a 4% PBT by Q4 FY27 is something which we want to make sure that we live up to. And towards that, we have taken a series of programs which are already on the way, and we clearly have a very, very strong roadmap in terms of managing our cost structures and driving leverage, which Vaidi can throw more color on, to ensure that we hit the 4% PBT target. So we are definitely going after both the revenue engine and the cost engine. A lot of focus right now. The market is what it is from a revenue. We have to live through the uncertainties, but what we can control is the cost much better, and that is where the strategic initiatives are playing out. And I think as we exit FY26, you will clearly see that linearity moving towards an exponential path.
Understood. Mr. Vaidyanathan, it's an uncertain environment. We did speak about that. In such an uncertain environment, how do you plan to drive operational efficiency within a business which hasn't done as well in the last 3 years as one would have hoped? So what changes?
Yeah. So I think as Ravi mentioned, what is in our control is only the cost, right?
Right.
I think we have taken a lot of series of actions in order to re-baseline our costs. I think one of the critical things is the IFM turnaround that we were able to do last year, which is giving results the current year. Similarly, the Project One, the initiative that we have taken to completely transform our UK and Europe business. Again, this is primarily driven at the market, but also there is a lot of cost benefit towards that. So all these things, these are under our control. Irrespective of the market, playing out, I think we will be able to control these first to improve the profitability going forward.
Understood. So, what could you give us specifics on what will help get you to the 4% PBT? What costs are you planning to control? Give us and our viewers some bit of clarity on that.
Sure. For example, right now we are about 0.5%. To reach that 4%, there are three broad levers that is playing out. One is the integrated final mile business in the UK, which should give us an additional 0.4% of profitability improvement. We have taken a lot of strategic actions there, including a one-time price correction, which will give us a significant improvement in the profitability of the IFM business. The second big lever is the Project One, which is the integration of our ISCS business and IFM business in the UK and Europe. Again, that is expected to give at least 100 to 120 crores of cost benefit from FY27 onwards on an annualized basis. There will be benefits in the current year as well, but on an annualized basis, the benefits could be about 100 to 120 crores. The third big lever is for us the operating leverage. The cost reduction program that we are running across all the geographies, not only UK and Europe, but also in India, Asia Pacific, as well as in North America market, that will also significantly give us the operating leverage. So all these factors combined together with the double-digit growth which Ravi was mentioning to help us take it to the 4% PBT.
And sir, how quickly do you see this translate? So take us through the journey, Mr. Vaidyanathan. Will it be 2% PBT this year? Will it be 3% PBT this year and thereafter 4? Will it be immediate 4 in FY27? Give us that color. Give us the timing.
Yeah. So I will not be able to give you specifically in terms of what we expect FY26. Sure. But you can say that sequentially there will be an improvement in the PBT because all the actions that we have taken, when we start selling the benefit, sequentially we will start seeing the improvement in the PBT.
So Harsh, let me just qualify that by saying, look, we don't want to guide the market towards FY26, but we will exit FY27 Q4 at a 4% PBT. So that you can then build that chart. Like Vaidhi said, about 0.4% coming from IFM, 1.2% coming from the Project One initiatives, and the rest coming from the leverage to a base of 0.5. And that's and with all of these measures already kicking in, that's why I said we will move from a linear to a slightly more exponential trajectory as we exit FY27.
Got it. Mr. Vishwanathan or Mr. Vaidyanathan, whoever this is may be relevant for, working capital, there was a one-off there in FY24. There was an adjustment which happened and we explained that to viewers. Is that a thing of the past or do you continue to believe that may be a concern in the future at some point as well?
The working capital is at a optimal level, I would say, the business that we are currently in. And it will continue to, as the business grows, the working capital requirement will grow. I think the FY24 was a one-off move because we came out of the factoring. But I think broadly, I think we are from an optimal point of view, I think we are very, very comfortable.
Mr. Vishwanathan, talk to us about the sustainability of this 4% PBT and talk to us about new order wins that are coming your way. What's the traction looking like in this environment at the current juncture?
Right. I think let me first talk about the opportunities and the orders.
Sure.
Clearly, our pipeline is continuously growing. We are winning large deals in the market. The ISCS segment typically has a longer gestation period in terms of converting those contracts, and we have contracts at multiple stages in the funnel when you look at the pipeline, and therefore the confidence of having a sustainable double-digit revenue growth is pretty high. The key for us, of course, is the execution. We think the first step is to get to the 4% PBT, but as we exit FY27, a lot of things that we are doing today in terms of investment in AI, in agentic AI, all of this should play out, and that should start giving us incremental opportunities to increase our PBT from 4 and beyond. In the investor meeting earlier in the day, we said the best-in-class operate around 8% and some at a slightly higher number. So our first step is to get to 4 and then build a plan to get to the 8 in the mid to long term. And for that, we have to, as a company, imbibe AI. We have started multiple projects. We have AI deployed in scale in the US, in India, and also in the UK.
Right.
And we expect that to take more prominence as we go forward.
Right. Mr. Vishwanathan, would it be prudent to say 8% by FY30 is the aspiration?
It's probably early to jump to that, but we will most definitely make a projection as we exit FY26 and as we see the trajectory evolving.
Sure.
But clearly, internally, we do have a plan which probably we can share by the end of the fiscal.
Excellent. Thank you so much, both of you, gentlemen, for joining us and giving us that perspective. We'll let you go on that note. And viewers, frankly, completely out of time on this edition of KYC. So we're going to close this show here with a 4 out of 8 on the current KYC rating of TVS Supply Chain.
हेलो,
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो,
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hi, we're talking about Your Money Matters on NDTV Profit and my name is Alex Matthew. Now, the headlines from earlier in the day might have caught your attention. ICICI Bank has gone ahead and said that for new accounts, savings bank accounts that are opened after the 1st of August, the minimum average balance in urban centers and in metros will have to be 50,000 rupees. Now, if you're in one of those areas, you're probably wondering whether you should go out and have an account like that in the first place. So let's talk about that at the start. We're going to talk about this, but we're also going to talk about mid-cap actively managed equity mutual fund schemes and the fact that to a large extent in the recent past, and here I'm talking about a couple of years, they have not managed to beat the benchmark. So increasingly the voices are getting louder to say that maybe even for this category you should look at a passive approach to investing. We're going to talk about those two, and we'll also talk about the latest data on mutual fund inflows or inflows into mutual funds in the month of July. Joining me is Vishal Dhawan, founder and chief executive officer of Plan Ahead Wealth Advisors, and Prableen Bajpai, the founder of FinFix Research and Analytics. Thank you so much to the both of you for taking the time. Vishal, on the first topic, which is a savings bank account and minimum average balance of 50,000 rupees, it sounds a little high. The point is that we've been already talking about people moving away from savings accounts because the rate offered does not beat inflation post-tax. So what would you say about something like this?
Right, thanks for having me over. So I think there's very clearly two things happening simultaneously. One is banks have cut savings rates to historic lows, and therefore whatever money lies around in savings accounts now typically earns you much lower interest than it did a while ago, and certainly much lower than inflation. On the other side, you now have a whole plethora of options available as an investor to actually park away money that you would normally keep in a savings account to take care of liquidity needs. So historically, what would end up happening is people would put money in a savings account to take care of emergencies, contingencies, etc. And we clearly believe that, besides having maybe a month or maximum two of balances lying in a savings account, everything else needs to go away either to support shorter term goals or even longer term goals like your retirement. And therefore, clearly, if your balances in terms of requirement for emergency provisions are not going to be more than 50,000 rupees, which covers a month or two of expenses, then it doesn't make sense to maintain those kind of balances. On top of that, there could be double income families where husband and wife have salary accounts in two different places. So the money is actually distributed amongst multiple accounts as well. So our thought is that unless there is a very large amount of contingency monies or emergency monies that you require, either because your expenses are very high or there are lots of dependencies on your income because there are maybe parents or other people who also need to get supported, it is a good idea to think about whether I really need to keep 50,000 rupees in a savings account or keep the rest of my money away in arbitrage funds or liquid or overnight funds so that I can get a better rate of return than what I get in a savings account.
You want to weigh in on this, Prableen? So I've spoken to so many of the advisor community and they've pretty much said the same thing. You can use a credit card for emergency purposes, and this is because T+1, which is transaction plus one, is when you get your liquid fund money, and T+2 is when you get your arbitrage fund money, and so it's not immediately available to you. So would you say emergencies, you can use your credit card and you have 6 months to 12 months of your expenses in liquid plus arbitrage?
So Alex, first on the point of this compulsory sort of a hike, which is for ICICI Bank, it's gone up to 50,000. So number one, that saving bank, it gives us, undeniable benefits. Of course, there's quick access to your money. Then, your deposits are insured up to 5 lakhs and other things. But any such hike, which is forced upon you, is not the right approach, because from the 26th of June, ICICI, for example, has set the saving bank interest rates at 2.5%. And let's say it was 10,000 earlier, now it is 50,000. So that 40,000 at 2.5 is going to earn you only about 1,000 rupees in a year. And if same was, let's say, utilized somewhere else, parked in a liquid fund, which was giving you just about 6%, still you were getting about 2,400. And for somebody who's contemplating whether I should keep, 40,000 or 50,000 or 10,000 in the savings bank account, I think that 1,400 rupee difference also means a lot. And any such, event of a compulsory rise definitely kind of shrinks their options. But yes, ideally, the better way is that then you split. If you still want to continue with a similar sort of a bank, probably if you want to keep 6 months of your contingency fund, then let's say maybe 2 months of your contingency fund can be in your savings bank account and the 4 months can be in a liquid fund. So you'll have to split and devise a strategy wherein you're not paying a penalty. Of course, if you're not looking to change the bank, from the bank's perspective, it's a good way to save because, they are going to increase their profit margins with every investor if they're going to have this 40,000 difference and the kind of interest payment that, reduced interest payment that they're going to make. So from the bank's point of view, it's great. But I think for investors, definitely for contingencies, I think liquid funds and arbitrage funds make a lot more sense.
I mean, the argument for the bank can be several, and we've discussed that through the day. I want to focus on what the individual should do, and both of you have pretty well summed up what the approach should be. Just one last point, Vishal, in the event that you do want to have this 50,000 rupees, one, of course, you've already stipulated if your expenses are to that extent, nothing changes for you. But if you're making that choice, would it be because the bank is giving you something that nobody else is offering you, maybe a better rate on a loan or maybe a credit card product that is more beneficial? So it needs to make sense for you, right?
Absolutely. I think, there has to be a very strong reason because unless we see the entire banking industry start to raise minimum balances where you're sort of not able to make a choice, you do want to be very clear that the reason why you're giving away that potential higher return on your liquidity is coming because there's something else that's offered to you by the bank, which is very unique. And, obviously for different people that what is unique can vary. But I think it needs to be well thought through. It can't be the default decision saying that, anyway, I maintain 50,000 rupees in my bank account. Maybe this will sort of trigger people to think a little bit more deeply about the balances also that they maintain and whether it's really sensible to maintain those kind of balances when you have so many other instruments available for yourself. And of course, you did make the very important point as well, Alex, that, for emergencies, typically now credit cards become very, very good tools because they give you instant access to emergency money. And it gives you time to take your money out from other places in the interim.
Jay Kotak had an important point that he made on social media platform X, where he said that 90% of India continues to earn less than 25,000 rupees. And by the way, that 25,000 rupees is the minimum average balance that will have to be maintained in semi-urban areas, 10,000 rupees in rural areas. So it's a pretty clear statement that the bank is making. Let us know what you think about that in the comment section, but we have to move on to the next conversation, which has to do with mid-cap actively managed funds. And it continues to be a category that receives a large amount of money, but the question we're asking is, have these schemes really performed better than the benchmark? The answer is no to a large extent. Isn't that right, Prableen?
Yes, Alex. I think we currently have roughly 30 schemes, out of which 29 have a track record. At least year to date, one is a very recent one, only launched in March. And we've seen that actively managed mid-cap schemes have struggled to beat the mid-cap 150 TRI, the Nifty index. And of course, it is because of a number of reasons. In terms of trailing returns, Alex, probably the difference won't be that much. So if we just see, year to date, it will be kind of a 1.49% fall for the index. And at the same time, we have seen schemes which have given returns, let's say positive 2.88%, 3%. But overall, the index funds, the performance has oscillated, at least the year to date has oscillated between negative 11.37% to positive 2.88%. So with that kind of an oscillation that we see and the difference in the returns within the actively managed mid-caps with the drying up of alpha generation, which is happening, I think it makes a lot of sense to move towards actively managed passive funds. From actively managed to passive funds. And I think this is something that I have been, saying for the last many years, that I think your core can be a large cap passive as well as a mid cap passive, and then complemented with the other schemes in the portfolio overall.
But so I know that you've been saying this, and we've had similar conversations. But even if you look at the last 7 years or so, Vishal, we've seen ups and downs for the broader markets. But I've heard 7 years back or 8 years back, it was very clear even then that for your large cap requirements, index funds are a no-brainer. I'm actually now quite enamored with this idea that it's extended beyond that, and now people are increasingly talking about mid-cap schemes. Is it only because of the performance of the last 2-3 years, or is it increasingly getting more difficult for fund managers to generate that alpha, Vishal, in the mid-cap category?
So I do think it's getting hard for alpha generation because of a variety of reasons. One is that, as more and more research happens, and clearly India has become a much more popular investment destination than what it used to be, the research across mid-sized companies has also expanded. And therefore, the ability to generate alpha coming from superior research, superior information has automatically reduced. The second thing that you do end up seeing very clearly is that, when funds get very large, it does create its own challenges in terms of being able to identify businesses that can actually,